The UK economy has finally emerged from recession after 6 quarters of straight declines, but it doesn't seem like happy days are here again. We partner right now with the FT to bring you Lex on Bloomberg. You get a sneak peek of the Financial Times' flagship column a day early. Paul Rathbone joining us now live from London. Paul, is it time to break out the champagne? It seems maybe it's a little early.
Yeah, well, I think you're quite right there, Deirdre. The 0.1% expansion in the fourth quarter of last year is hardly something to cheer about, especially as the consensus view had been for 0.4% growth. It could have been worse, given the UK's exposure to real estate and financial services, and in some countries it was. Japan and Germany, peak to trough, shrank more than the UK did. But nonetheless, the UK is the last economy to emerge out of recession, and a 0.1% rate of growth is hardly spectacular, given everything that has been thrown at it, from quantitative easing to...
Sorry, Paul, I didn't mean to cut you off, but I'm just wondering if there's a chance that the figure could be revised upwards.
There is, indeed. That is the silver lining in the cloud. For one, surveys have been pointing towards quite bullish confidence lately. The OECD's UK leading indicator rose more than 7% in November, which is its fastest rate of growth since 1987, has only been bested 3 times in 4 years. So there's a dichotomy between the official data and more informal data. Plus, there's the standard revision that follows when official statistics come out, and then the final figures come out some months later.
So what does that mean for policy and then, by extension, the markets?
Well, for policy, I think probably if you're in Gordon Brown's seat, you'd want to delay the election for as long as possible, given that if the survey data is correct, you want to go into the polls with the economy growing more conclusively than it is at the moment. Sterling has dropped slightly and bonds have risen a bit following this data, which you'd expect, given that the chance that the Bank of England might leave rates lower for longer or possibly even reintroduce quantitative easing, the chance of that happening is probably increased at the margin.
And what does this mean as far as the exit strategy goes?
Well, at the moment, quantitative easing is going to be phased out in February. But as I mentioned, there is a chance that if this lackluster economic performance continues, that it could be brought back in. There's one sort of anomalous bit of the UK experience, is that inflation hasn't troughed in the same way as it has in other countries. So it's possible that the recession has permanently scarred, or near permanently scarred, the UK economy, which means its resilience and productive capacity may have been impaired, and that inflationary expectations could be rising again. So that, on the other hand, could be quelling any enthusiasm from the Bank of England to reintroduce some of the stimulative measures that it's been using in the past.
Paul, we thank you very much. Paul Rathbone joining us there from London, from the FT.